Good evening, everybody, and welcome to today's live market analysis. It's such a pleasure to be with you as we delve in deep into the goings on of markets. Spoiler alert, we will have a portfolio management change today and a little bit of a special announcement after the disclaimer, which says that everything we're going to discuss today is general in nature and has not taken into account your personal financial circumstances, objectives or needs. So before acting upon any of these items, please consider them carefully or seek the help of a financial professional. Everything you do in the markets, of course, is you. It's all about you. It's all about what you decide to do. I can give you information, but at the end of the day, what you do with your money is your responsibility and not mine. Markets are risky. A little bit of a public service announcement. We will be taking a break from today, well, after today, of course. This is the last session for 2024, and we will resume in the new year on Monday, 30th of Jan. The reason for that, of course, is I'm going to be taking a bit of time off. You're probably going to be taking a bit of time off, and we all need a break after the year that we've had. And I've chosen Monday the 30th because it's the first Monday back after the Australia Day holiday, isn't it? So please take that into account. As part of that public service announcement, I will either cancel the events between now and then, or I may leave them, depending on whether I feel deleting them will break them. So I don't want to break them. And for some reason, Google has duplicated our meetings anyway. Let me try to get to the bottom of those. For tonight, though, the agenda is simple. Send me your requests. Let's talk about the stocks that you want to talk about, or it could be bonds, it could be crypto, it could be foreign exchange. If there's, I can get a chart on it, let's talk about it. Or it could be anything to do with trading. So the 3 M's being methodology, money management, and mindset. Without further ado, let us head over to the Amy Broker screen. And hopefully we're still functioning there. I'm going to use the cough button for a second, because that was quite a whirlwind intro. And let's head over, not to Life 360. It's funny about how I'm getting a sense of deja vu here between Life 360 and Domain Holdings, but we're going to head over to the Nasdaq Composite Index, where it's all guns blazing. Roscoe, if I could get you to mute your microphone for me, please, because I'm getting a little bit of background news, but thank you for giving me that help before. It's not you? Okay, well, whoever else is off mute, please put yourself on mute. And the portfolio management model for the Nasdaq is not going to change. I said at the start, bit of a spoiler alert, we're going to change one. It's not this one. By process of elimination, you can figure out which one it's going to be. But this is still gangbusters. And I've got a feeling, I shouldn't even say this, but I'm feeling something bad is going to happen here, if only because something a bit bad is happening here in the Russell 2000, the heart of corporate America. This is the other piece of the puzzle when it comes to determining how much risk we should have in the market. You're probably feeling a little bit of this with some of your US trades as well. They're not all as gangbusters as the Nasdaq Composite. The Nasdaq Composite highly concentrated in our big 7 to 10 stocks. The Russell 2000 far less so, a fraction of that concentration order of magnitude. If we just look at this, everything's hunky-dory. If we're looking at this, I still think we're full risk position, but maybe don't add any new risk if you really don't have to. Be a bit more vigilant on pruning some of those weaker setups or things that are not going the right way, or consider maybe adding a few strategic shorts here and there. Okay, so that's, I think, one way we can deal with it. Now, the other part of the portfolio management equation is over here in Australia, where we kind of have to do something. We have to respond to this. We can't ignore it any longer because we're trading beneath the short-term trend ribbon. Ideally, we don't want to see that. And in a healthy bull market, we really shouldn't be there. We shouldn't be there. It's okay to flitter in and around it. Sometimes, if we get here and flittering, and that was a bit more than a flitter, maybe here's a bit of a flitter. That's probably a better example, where I might ignore it and say, well, I need to see a bit more before I do anything. That's a bit more than a flitter. I think this is a bit more than a flitter as well. It's not just the fact we're beneath it, it's the fact that we've got some pretty decisive candles there. They're not big. None of them in and of themselves is anything to be concerned about, but they're starting to add up. We're beneath the trend ribbon. The trend ribbon's turned amber. That's the final thing I wanted to mention as well. And all we're talking about here is just pulling back to a 2/3 exposure. Okay, so if things are getting stopped out, if things are getting -thirded, if that's a word, -thirded, if it's not, I've made it a word. So if we are being -thirded, then we are not going to be adding thirds anywhere else just until we can pare back. And you might want to ignore that, and that's up to you. Hey, knock yourself out, keep adding all that risk. and you might be right. Or if this continues to roll, you'd be really glad that you didn't. And we don't know the future, but we have to have that line in the sand. I posted a tweet today, or it might have been a response to somebody who said, I posted that Boss Energy thing where I took all of my ChartWatch features for Boss, and wow, I nailed that call, and showed you them in sequence, made like a movie out of it, so you can see how the chart changed. And each time that I called it a feature short, effectively. Somebody responded to that and they said, oh, look, would have been good if you were short. And I responded to that saying, look, I wasn't trying to, big note myself or anything. I just feel that as investors, we need to have a line in the sand, and we need to respect that line in the sand, okay? We need to have a systematic way of identifying things. We need to have more risk, we need to have less risk, and we've got to be disciplined enough to follow it, okay? And that's my message there. So I'm officially minus a third here, 2/3 risk position in Australia, and just being a little bit more cautious in the US. And I'm hoping, and I still think in my guts, that this will all blow over, and a couple of big white candles, and we're all hunky-dory again, okay? Because seasonally, this is still a very, very good time of the year. Let us now have a look around the grounds and see if there's anything that can push us off this thesis. Obviously, I've mentioned that. And lo and behold, you've heard me say it here so many times that the ASX 200 doesn't move like the S&P 500. It doesn't move like the Nasdaq. It doesn't move like the Dow Jones. It doesn't move really like any other index in the world, apart from, funnily enough, the Russell 2000. How about that? And I think we're seeing that borne out today. Let's head over to Europe, and I'll just do a normal zoom here. Is there a red flag there? I don't think so. Nobody cares about what the French are doing anyway. The Germans, they're having a wonderful time over there, and that's actually really encouraging. Anything we can get, any bastion of strength is telling us that actually, if fund managers were really concerned, Germany wouldn't look like that. And I think that's a very fair statement. Europe is okay. The UK is just fine. Not experienced, very similar market to ours. Largely financials and then largely resources. And look, they're actually doing better than us. So what's wrong with us? We're pegged to that Russell 2000 for some reason. Spain pulling back, but not an issue. Asia, not looking great. Let's face it, we say that a lot, but it's not a major issue. The Nikkei, going very sideways. Nifty 50 having a little bit of a bounce off the long-term uptrend ribbon. The Shanghai Composite was actually looking half decent there, but it somehow manages to find some black candles every time I say that. And there's a case in point. So I think we're okay. Let's have a quick look through the ASX sectors. Getting tougher here, getting much tougher to find these clear-cut winners. Discretionary, still okay. Pulling back a little bit, but still very much okay. Energy, I'm so glad for you that you tune in to me here on Mondays, but also during the week, because I've managed to keep you out of that sector, or if you're still in the sector, at least you are not blaming me for it. The financials starting to pull back. I think we're moving to equilibrium in a few of those charts. Commonwealth Bank still looks very good. Gold is a tricky one. I must admit, I've been whipsawed there, whipsawed out, whipsawed back in, whipsawed out again. It's getting tougher there with interest rates. We'll talk about that in a second. Healthcare, neither here nor there, very sideways. Not a very attractive sector though. Information technology, I don't know, what do you think about that? Two big pushes, two big supply side pushes here and here, perhaps the second one confirming the first. And also the response to this big push has been very meek and mild. I would say we're equilibrium there now. We've gone from demand side, now we're equilibrium. Where we go next, I don't know, but we're certainly not demand side anymore. Materials still very poor. That hasn't changed. That's the resources sector looking even worse than the materials, which indicate some of those building products companies, which are the difference between the materials sector and the property sector, aren't looking very strong. Property's been a really tough one for me as well. I think whipsawed a couple of times there, now heading back down again. Staples, stable. Telecommunication services, very much part of that technology sector, in my opinion, starting to roll off also. Utilities, neither here nor there, and that's the end of that list. Let us, because we're here, might as well do them. We'll have a look at the base metals, and I'm going to change that to a line chart for you. Aluminium, well, there are plenty of mitigating circumstances around aluminium at the moment, and more to do with the supply side, and some of that supply potentially being shut down. So that's certainly supporting that aluminium price. In copper, no such issues there. In fact, really the supply side is ramping back up again, particularly in Chile. And we're seeing a record production from Codelco recorded not that long ago. I think it was for the month of October, but somebody might want to Google that, correct me if I'm wrong, or it might have been for the September quarter, but you get the drift. So copper's still quite subdued. I'll skip iron ore because we're going to look at it elsewhere in a second. Nickel's still bouncing around the bottom, but not giving us a clear-cut sign that this global economic growth picture is improving. If China is going to be stimulated like we keep getting promised it will be, you know, if the world is turning around because interest rates are coming down and these things are going to be supported, we shouldn't be seeing these charts. It's not happening. I don't want to scare you or anything, but I'm just pointing out the realities of the pictures that we can see on screen, because they are just pictures, and that is tin there turning back down again. It's starting to look more really like that trend, long-term trend is rolling over, because we're seeing dynamic supply now coming into the system from the dynamic trend ribbon and not demand. Zinc also actually still looking pretty good there. Again, there are some supply side factors working in the zinc market. Having a look at lithium carbonate, this is a candle old because I haven't done the candle for today. I don't think it did much today, but it was looking quite forlorn there. I'm pretty sure I mentioned last week that the fun and the games, the seasonal rally is very much run and done, and we're back to normal here in the lithium market. Let's head over to, not to there, we're going to go to here. You can't see this yet, but you will be able to see it in a second. Again, just another public service announcement that your watch lists are up and running for you today, and we are in the right place. So if you can't find the watch list, each Monday night with this recording link that I send you, there's also a link to the YouTube tutorial. So click on that, and that's got all the information on how you find the two Chart Watch Daily ASX scans watch lists, being the downtrends and the uptrends are there, okay? And then the next day you get the feature charts as well. But that's not where we're heading. We're heading over to futures and forex. We're going to kick off with silver. I must admit, I took the bait. We were heading up through here, so double bottom, some decent candles through here, getting above the short-term uptrend ribbon, taking out 3204, nice big white candle there, and I took the bait. Earlier than that, really, I kind of tipped it through here in some updates, and then boom, shake the room. That's Friday, and that's today. And really, what's happening? It's all about rates, as we're about to see, and gold has done the same thing. And it does, I guess, speak to some of the volatility in some of those macro factors that we are experiencing and probably could keep on experiencing, which is going to make picking some of these commodities really tough. Even copper started to show the inkling of a little bit of a double bottom, but snuffed out completely, I would say, based upon hitting that long-term trend ribbon and moving down. And really that's confirming for me that we are in long-term trend transition. Iron ore, I got a little bit excited, only a little bit, that maybe the December rally had started. I don't think we can completely rule out that it's dead, although it's on life support. Something else on life support is uranium. My position hasn't changed on that, so I haven't been whipsawed on this at all. I've maintained my position on uranium since I reckoned here. And go back and check the tapes and go back and check the analysis, and I know it's that day. It has to be that day. It can't be any other day, because I have a system that I teach you, and you know the system is that when we break beneath the long-term trend ribbon and we have the dink, remember the dink? And this dinked up and down, confirming that long-term trend ribbon has gone from acting, over here it's acting as dynamic demand, to acting as dynamic supply, and boom, shake the room again. We are officially long-term downtrend, and I know it seems very early to call it there, but that is my absolute crystal clear criteria for saying that the transition has occurred. Obviously, through here we've become equilibrium, but that confirmation there says, no, we're in a new long-term downtrend. Respected here, and that's where we are. So, sorry, uranium bulls. I don't mean to upset you. I really don't. I take no pleasure in it. I promise you that. I can't. It's just candles and price action to me anyway. Going very, very sideways there with the crude oil, and we'll have a look at natural gas just for interest, because we're here. Look at that long-term uptrend ribbon. It just keeps killing this darn thing. But maybe there's a few more, high troughs. There's a bit more pressure on it. We're testing it more frequently than before. Wouldn't that be interesting if that turned up? Something bad in the world is probably happening if it does. Thermal coal completely kaputski. Again, the long-term downtrend ribbon killed that one. And you need to get a T-shirt, don't you? The long-term downtrend ribbon killed my ... And we are here in short and long-term downtrends on the Coking coal as well. I just realised I've put you in the wrong place, so I can't see you, and now I've put you in the right place and I can see you. I think that's it for the commodities. We're going to finish by having a quick look at the bond market. Actually, before we do, we've got the Australian dollar down here, and we've got Bitcoin, so I'll have a couple of quick looks there. What an amazing chart that is, and you just look at the suredness of this downtrend, just how in control the supply side is. I mean, you've got a candle like this. That was the Chinese stimulus again. Or was it this one? Might have been that one. Was that one? It doesn't matter. But the point is, it went up because, this China stimulus by the Aussie dollar, and then it just got smacked back down again. Maybe one of them was our employment data. Maybe that's the employment data. Maybe that's the China stimulus, the last promise, where nothing happened. It was no substance. But every time there's a positive development for the Aussie dollar, it gets smacked back down again. And I feel that there's a long way to go here. And what's our target? Just out of curiosity. Let me even that out. Well, not that far. I mean, 62.7. And then there's a couple of points there, isn't there? 61.7. So by default, I've got some Aussie dollars. I've got some US dollars, I should say, by default now, because I crystallized half of my profits on Bitcoin. So that might be a trigger for me to sit on my US dollars before I translate them back to Aussie. That's Bitcoin on the weekly chart, and looking at Bitcoin on the daily chart. Actually, better than I thought. I thought it would do a bit more than 100. I got 103 and some change. It would pull back. I actually thought it might even print a high 8, but it hasn't. So full credit to Bitcoin, and this is why this is my strategy. I don't sell it all. I had to sell some. I was compelled to sell some because it was the round number. I absolutely must. That's my rule. I follow my rules, and it's kept going. So that's okay too. That's why we don't. We have this model of not all in and not all out for that reason, in strong trends particularly. Looks fine. I can't see anything to suggest why you wouldn't hold Bitcoin right now. Have a quick look at Ethereum, only because it's there. I could go ditto, but it's clearly not the main game. Bitcoin still remains the main game. While we're here, because it's a little bit incongruous with some of the things we're going to be doing down the track, let's look at Pepe, and this one is for Craig, and we might go to, I don't know, let's go to that one, Pepe. Guessing that's against the US dollar. It is against the US dollar. So Craig looks very similar to many of the other altcoins that have popped. So this one happens to be a meme coin. So it's Pepe's the little frog, if you didn't know that. And if you didn't know that, that's okay. Yeah, you can continue to live your life quite happily, not knowing that Pepe is a frog, and a meme frog at that. I think it looks fine, Craig. I think it looks as fine as everything else. I mean, there are some sort of a zebra set of black candles coming back down there to the light green zone. If I saw a big demand side candle here, then yes, I can't see any reason why you couldn't go with it. While it's printing zebra pattern, there's nothing to do, but rest assured, at least you do have a short term and a long term uptrend, but it's going to be as good as any of the other ones. Is this my favorite chart right now? No, it's not, but if you threw 10 cryptos at me and we looked at them, I might well find one. I'm not averse to having a go. Let us finish off, as I promised, with the bond market, which it has to be talked about today, because this is what's happening. This is why you're frustrated with the market right now, because of this move up in the bond market. This is US market saying, well, we're not sure that the Fed's going to be that aggressive, or as aggressive as we'd initially hoped, because for all intents and purposes, it doesn't seem like the US economy is falling in a heap. Who would have thought that? That's actually a good thing, but there is still a little bit of a painful adjustment. It hasn't hurt the Nasdaq incredibly. It's hurting a bit of everything else. Just a quick look at the US 2s, less pronounced there. So long rates, long rates, that's painful when long rates go up, because it's going to affect your mortgage yields. It's going to have more of an impact in the market. So that's a little bit disturbing. Aussie rates, we're seeing something very similar because of that employment data, and it's been a wild week, and I talked about volatility, and that's what we're feeling is boom. And this is the bond market. Bond markets, in theory, shouldn't have too much volatility associated with them, but boom, boom. Weaker than better than expected data, more dovish RBA. There's a lot going on at the moment. So that uncertainty is hurting us there. If this settles down, again, very gradual downtrend or a sideways trend. Small candles, ladies and gentlemen. We don't want to see big candles. We just want to see small candles here. Then our stock market will settle down, and that's what we're dealing with. I think we've caught everything else there. Let's just quickly make sure there's no banking crisis in the US. And there isn't, so that's good too. All right, let's head over to your offline request now. We're going to head back to the AMI Broker screen, and we're going to look at Aussie stocks first with Adonis. It's got Airtasker, which is, I think, a really nice looking chart at the moment. It made feature chart. I reckon there it made feature chart, if I'm not mistaken. And it's gone up a little bit since then. No big deal, but it's still looking very strong. I'm going to go to the weekly chart to see if there's anything out the corner of my eye that concerns me. I can see a fairly minor peak through here. But that's at 50 cents, which it makes sense because that's a bit of a round number. It's not a major round number like $1, but it's something that we should at least be aware of. So let's round that off at 50 and go 0.5, and that's nice and straight now. We might change that colour to red to indicate our supply zone. So pretty fine. What's that one there? Just out of curiosity, that one was a little bit more, had a bit more of an impact over a longer period of time, and we're breaking through that. Okay, well that's good too. So that supply level probably explains that one. Okay, heading back to the daily chart to complete our analysis here. Well, that's good. We've closed above that. It's not a problem anymore. That's a very strong candle. Today's candle, I think, is a very strong candle as well in a very weak market. We started out with a black candle. Many of you probably tuned in the morning. You shouldn't do that. I don't know why. Why are you tuning in the morning? Unless you have to make a trade. And even then, try and get that done before the market opens, set the trade up, or in the first 15, 20 minutes, and then please switch off. But to complete the story, you would have probably seen a black candle, have gone, oh, that doesn't look good, and then you come back at the end of the day and the demand has come in. They're buying the dip in this one, and that's a really good sign. Above average volume today and over the last few days tells me there's a bit of action, a bit of activity, a bit of interest here as well. So that's impressive. Short-term uptrend, long-term uptrend. Candles predominantly white. Price action is higher peaks and higher troughs. I can't fault this one, and for that reason, I put it in as not only is it in your watch list tonight. If it's in the watch list, the broader watch list, it means plus 1/3 by default by being in there. And if it's a feature chart, which it will be a feature chart tomorrow, it means it's a high conviction for me. So to answer your question, Adonis, or your prompt, for FRP plus 1/3, isn't it? Nothing else to do here but. So let's go FRP and plus 1/3 on Airtasker. Let's go to VGL, which also looks very good. Vista Group International. This one's not ringing a bell. Hasn't come up in my scans for a while. I'm guessing because if I go over here to minimum turnover filter, we've got 0. So it's not meeting my minimum turnover criteria. That doesn't mean it's a bad stock. It just means it's not meeting my minimum turnover criteria. Let's go normal, and it's looking even better to me. I've got no objections at all. It's a wonderful base pattern there. The only thing with these base patterns is you don't have to wait for a breakout. Please don't wait for a breakout. A nice white candle, high close into anywhere near the top of that zone is sufficient. The only reason why I'm pausing is I'm looking up, seeing $3. Now, is $3 an issue here? I want you to think about that. Ask yourself a question. Is $3 an issue here? Should it stop me from getting in? I don't think it is, because I think we're already dealing with $3. I think all of this is to do with $3. It might be to do with something out here, but to figure that out, we're going to have a look, aren't we? Oh, okay, there you go. I thought this might have been blue sky. It's not. So there is some stuff out here, and it's a bit of a zone, isn't it? So let us, rather than use arrows, let us get my box tool going, and I'm going to get rid of that one because it's got dashed lines, and that annoys me. And I'm going to grab my tool here. So really, all of this is a supply zone, and you can go from there to there, I reckon. And I'm just going to draw that across, and we'll see what impact that's at. Well, there you go. Yeah, how about that? There's also a little bit here, but I feel that we've already pegged that one. But it's probably also causing the initial response. Right? It's probably also causing the initial response. But there's a bit going on here at exactly $3. So it's not a surprise. I think we're dealing with it. So let's get it out of our minds. It is sufficient, therefore, in my opinion, to have something like this. And we're not there yet, Adonis. I think we want to see why have we still got these bloody dashed lines driving me nuts. Amy Broker, turn that off, and it's obviously that's not the color we want, that's the color we want, there you go. Something like that. And I think then it's going to be, well, it's FRP now, so it's still FRP. We've got short-term uptrend, long-term uptrend. The price action is congesting. That's expected. It's happening for a reason, so we're okay with that. Is it predominantly demand-side candles? Well, I think it is. I mean, they're very sketchy, but I'm still seeing more whites than blacks, and I'm seeing more lower shadows, lower pointing shadows than upward pointing shadows. So we're certainly at FRP. But to get to the plus 1/3, I want to see really at the next high close, and anything above say 285 is probably fine. Okay. Let's keep moving. I like that one, Adonis. Keep an eye on it. GDG. Also still looking very good. Adonis is asking whether he should take some profits on this. I still think it looks fine. Yes, we've got a cluster of... Oh, actually, he's just saying in his email he's taken some profits on... Maybe that's on Hub because he mentioned a $30 number or something. And this is not $30. So I'm guessing maybe not here, Adonis. And I don't think you need to, but I was about to say, look, we've got 1, 2, 3, 4, 5, 6 black candles in a row, and ordinarily you'd say, well, that's not good. We shouldn't be seeing that many black candles in a row, but then think about what the market's doing. And the market's had 7 out of 9 black candles. And so therefore on the relative strength, it's actually still doing pretty well. Yes, it's, going a bit sideways, but the Aussie market's going down. So I'm still okay with that. The price action is still rising peaks. There's a little bit of a level there. You might want to keep an eye on that low there. It's 379. If we close beneath there, I'm still not that fussed because the real important level is down here. We've got that downward pointing shadow, that trough there, that big demand side candle low. The demand is in here, Adonis. This is where the demand is. Okay, well, actually, that's a very silly thing for me to say, and hopefully you have picked up why I shouldn't say that's where the demand is. So I don't know if there's demand there. I can't know because I can't tell the future, and I can't go and survey every person with demand in the market. Now, that would mean every person with cash. So I'd have to ask you, and I'd have to ask, the guy who delivered my package today, hey mate, before you go, like a sign, before you go, are you thinking of buying Generation Development Group at 360? Oh, Carl, I hadn't thought about it. That's not where the demand is. That's where that's where the demand was. Okay, so we know that for a fact. That's where the demand was. 100% I can say that. Nobody can debate it. Carl, why was the demand? Well, look at the bloody lower shadow. Look at the bleeding great big white candle. So that's where the demand was. That's where we think it will be in the future. And here's the point, Carl, get to the point. If it's not there in the future, then we got a problem, okay? And that is the rationale behind why I will say stuff like, well, close beneath there, I need to manage my risk. I don't have to get out everything, but I want to get out something. How much would I get out there? And this is where, it's a little bit of a grey area. Maybe it frustrates you. And Carl says, get out a third sometimes and get out 2/3 sometimes. Well, I think that's kind of a 2/3 kind of level. What do you reckon? And hopefully you also agree that you can't be too wrong here, can you? I mean, if you did a third, if you did 2/3, it's not such a big deal. I still think we're keeping some skin in the game. It would have to be the most awful candle for it to be a full exit there. Okay, so big black candle, low close. If it's just a normal run-of-the-mill candle like the last few we're seeing, then I think it's more of a 2/3 because of how pronounced that level is. So if I'm beneath it, I want to be out 2/3. Okay, hopefully that makes some sense. But I think pretty straightforward too for us at Adonis. And hopefully it goes back up and there's no issues. Okay, so this is the one, $70 he said that he'd taken some profits at. It was a round number. And I think you're right there, Adonis, for taking some off the table. We had some scratchings here last time, and we said that if you got a black candle like that one, all right, so I'm just going to delete it just so you can see that's drawn in. It's not actually there. We were going to minus a third, because we were looking beneath that trough and that, I don't even know if we had that candle low at that time. I suspect we did. If we did, then really it kind of should be there. And let's draw that out. And eventually, I'm guessing Adonis has done that. Okay, let's change the colour of that so we can see it against that candle. Is that okay? I think that makes sense. What do we do now? Is that candle, we talked about the size of the candle. We saw in the last case study, we said, well, if I saw a really big black candle getting below that level, that was important to me. and it closed near the low, I'd do 2/3. In fact, I think I might have said I'd do the whole lot, isn't it? So is that a minus 1/3 candle, or is that a minus 2/3 candle? What do you think? And I'm happy to type it in if it's just rhetorical to you and you go, Carl, come on, man, it's 2/3. I know where you're going with this. It's 2/3. Just keep going. If that's you, don't type it in. Jackie's typed in. But if you actually don't know, if you're going, Carl, look, I'm just trying to get the hang of this and I want to get the feel of what you're seeing, why is that not just a 1/3? Then let me know as well. But I think from what Jackie's saying, I think this is more of a 2/3 candle, isn't it? So, and that makes me feel good that you're kind of getting the gist of how this works. It's evidence-based. Yes, there's a little bit of grey area. We've got black and white candles, but there's a little bit of grey area. But at the margins, we're talking about 2/3 or a third, or, you can always get back into it, is the point. I think we are confirming that we want to be with that candle. Moving on, I think we're confirming with that candle that we want to be beneath this short-term trend ribbon, okay, which has turned amber. I don't want to give this much more room. For the last third, I reckon a close beneath that, and that's just my, if you can hear the buzzing, that's just an alarm to tell me at 7:45 to tell you not to put any new ones in. Now, we won't do that today. We'll keep going today. We'll answer all your questions. Obviously, due to technical issues, we started late. I don't think I want this one to get much below there. And look, I'll give you a number. What's that? That trough low there is sort of a 69.36. $70 is coming into play as well. We don't really want it psychologically. We don't want to be below $70 and staying below $70. And that's 69.25. So it's kind of like a 60, a 68.97 or something, just below that 69 round number. We don't close beneath that, then I think we are zero risk position. Very simple from here. So close less than is ZRP. And, hopefully this is a very common sense system. If it's not a black box system or a black and white system, it is a common sense system. Thank you, Adonis, for your 3. Let's move on to Mick. Mick's got SIG. Mick's also wondering, hey, Carl, it's been pretty good. Is it a minus third event? And I'm looking at this and I'm thinking, is it another minus third event? And last time we looked at this, I'm quite certain I put it up on screen and I might have typed in FRP and then was about to move on. I said, oh, wait a second. Oh, no, 100%. Do not pass go. Do not collect $200. I have to do this. And I put that little 1/3 on the screen because of the round number. And, we can either say, well, that was very clever, Carl. Or we can say that was pure luck, Carl. And one of those two is probably accurate. Or we can say, look, that's just the model. That's just the system, isn't it? So that's what we do. Since then, the candles haven't been that terrible, really. Even the down candles are still pretty good, and that is giving me plenty of encouragement with this one. The light green ribbon appears to be doing its job of providing dynamic demand. I think what's really neat about this for us going forward is that there's very little confusion for me. We're certainly out a third. I still think we're plus 2/3 risk position here. And I think beneath that, close beneath that, I think we can pretty much go to zero risk. And it's up to you. You might want to keep a third, and that's your consideration. But I think we're going to knock the 2/3 here because it's pretty much going to get us beneath the short-term trend ribbon. And this shadow here and this shadow here telling me demand's working in the system. If I'm beneath the low of that shadow, and I've closed beneath there, that demand's gone. And that concerns me. And I think it's too much to wait until we get all the way beneath here. So for me, it feels like a close beneath there. And I think we're certainly justified up to this point in having our 2/3, but probably not going any further than that. That's how I feel about it. Let's go to Mick's second one, which is KGN. Oh, see, I didn't see that one today. And we said plus 1/3, FRP, everything was looking good. It's taken a bit of a hit today in the market and on not good candles. I don't like that. I don't like its best friend, that, because really together they are speaking of selling into demand, or selling to excess demand, or selling into, or feeding the market's frenzy. So the best time if you're a big fund manager to get out is when other people are buying, because you get the most liquidity, you can move the most stock, and you can do it at the best prices. That's what that first candle looks like. And then second candle is there's the demand that was buying into the system and keeping it strong, kind of cottoned on to that game and said, we're actually not going to give you, we're not going to be fodder for you anymore. So the selling continued and the demand got out of the way. In fact, maybe some of that demand might have even on that candle started to just go neutral, just go flat on this one. So that is disturbing. Let's look to see where, because I don't really want to be beneath that shadow. And I'm talking about a first third here, and then there's that area there. So we're not far away from a precautionary getting a third off the table on this one. I think that's where I want to be, because I want to see the interaction here. I don't want to go more than that. It's just a precautionary third off the table. It'd probably break even if you got in on this candle. It's probably a fairly manageable loss if you got in on any of those candles, and then seeing how we go in this zone for the rest of it. So that's a bit frustrating, and we're going to have trades that go wonderfully from the start and we never look back, and they're always fantastic. And we're going to have trades that don't go well from the start, and then we've got to do something about it. But either way, we need to have a plan, and we need to be disciplined in our application. And I think this is one, unfortunately, that falls into the second camp. So third on the open tomorrow. I would say let's let it close beneath one of those two levels first. Okay, so let's see the close beneath there, and let's do the third, and let's take it from there, Mick. SVM, again, another one which unfortunately, and I think this little bit happening with this and Kogan and a few of the other ones we're seeing, is a victim of just the crappy market we're having at the moment. And in a better market, they probably would have been significantly better. But yeah, look, I think we're obviously a lower peak here, so just looking at stuff that we can actually peg. So point of supply, okay, point of demand. We did take that out today. I'm not sure if we closed beneath it, but we certainly did take it out. So we are seeing a move more to an equilibrium market from what was prior a demand side market. We're seeing today's candle is not the one we want to see, and we talked about the buddies, didn't we? The supply buddies being the candle with the black body upper shadow, and then the black follow through there also. Very much like the last one. Precautionary third. You might want to set a hard stop in the system, and it might be just a couple of pips beneath today's low. That's certainly one set and forget method. You could do that for the one we just had also. Find that point of demand and just pop a hard stop under there if you want to do it in a set or forget way for the third. So let's go similar, just to put something on the screen, minus a third. So we're going to go close below. It's going to be minus a third. And then let's see how we go. Is it more than a third thing? Look, it's pretty orderly. Yeah, I think it is, and I think it is. And I think, keeping a third in the game just to see how it interacts with that long-term uptrend ribbon. But we've lost enough momentum here, a little bit of volume today as well, which means we've displaced quite a bit of demand. I just don't want to be stuck in something that has a history. So I'm looking at the history here of really chopping around significantly. So just retasking that capital, I think, for me. Let's go to Adrian. Adrian's got AXE, which I thank goodness for that. Geez, I'm getting all depressed there, but we see something that looks very good. And Adrian was asking, is this going to be in the list for tomorrow? And the answer is yes, it is in the list. It very nearly made feature, and I just held back just because of this shadow, and I just wasn't sure if we were close enough to it, and I stared long and hard at it. And in the end, I thought, well, it's not the most easiest market out there. If we were in an easier market, I probably would have run it as a feature. But I thought, why? There's a tiny shadow there, but I found enough reasons not to run it as a feature. But don't forget, it's in the list. So 100% FRP plus 1/3 for me is just whether it made the feature. Only 5 stocks made the features anyway, right? So ART, which I told you about, that one is a no-brainer before pay. I don't think anybody's asked about it yet. No, they haven't. Certainly people have asked about Roberts, also asked about AGE, but surprised you didn't find before pay, and maybe Perry's got that on the way. But that looks very good. BIS, I thought was more than just a standard third. I think that looks very strong. Look at that candle today, above average volume. I know you might also say, oh, okay, well, that's getting close to a point of supply, but it's actually further away from its point of supply, relatively speaking, than AXE is, but a very strong final candle there. Hack also is just an obvious continuation pattern, and Semi, more of a turnaround play as well. But I thought I liked the way it's just bounced off that short-term uptrend ribbon, and a little bit of a gap and run. I like my gaps. So they were the 5 I felt deserved special attention in that shortlist, but not to detract too much from that, which I think is still a very strong setup for you, Adrian, and also for you, Robert, who's got that as well. Let's go to Tony. Tony's got ACE, which is Acusensus. Now, Tony says he really likes the fundamentals, and he does note that's probably not important to you, Carl. And you're right, Tony. I couldn't care less. But I do love the chart. It looks very good. I'm pretty sure we've talked about this in the past. Obviously, we have. I'm not sure if I've run it in the watch list because I'm guessing... Oh, no, it is a turnover filter, so I must have run it on that day. There's no other way. There's no other way I couldn't have run it on that day, and I must have run it on that day as well. Bit of an upper shadow there, but I don't think that's enough to push us off our game because it's happening at a very logical place. So if we sort of look where it's happening, of course it's happening there. If it didn't happen there, I'd be surprised. Since then, though, the 2 candles that we've got since then are telling us that the supply isn't that desperate, is it? I mean, obviously, we've got a bit of a push. A few people got a bit excited on the way in and people selling on the way out, and they pushed that back down, but there's been very little follow through from the supply side. What we haven't seen here is this candle's buddy, which is the long black candle, which unfortunately we are seeing all too often now in what is a little bit of a crappy market. So that would be the best buddy. So we call these supply buddies. The first candle is the transition candle, transition from short-term uptrend on its left, okay, with the supply, excess supply coming in to overwhelm that demand, potentially to the confirmation candle here of the short-term downtrend on the right of the transition candle, and those two are our supply buddies. Not there now. I think we're okay. FRP for me, and not adding a third, obviously, because we don't have the candle to do so. But I can't see any reason why we would hang in on that one. I don't think that's a species-ending event. I don't at this stage. Hey, if we've got the supply buddy follow through, then it changes things, okay? And you know what I'm looking for. Let's go to RZI for Tony. That's Tony's second one. FRP, 1/3 remaining. Raiz Invest, I don't remember this one coming up recently. Minimum turnover filter, no. So I haven't, but if it did come up in the scan, all I can ask you to do is believe me, but you know my model. It would have gone in there, and it certainly would have gone in there. It wouldn't make it in today because of the upper shadow. Why is there an upper shadow? Again, we'd be surprised if there wasn't. Okay, so the upper shadow is happening at a perfectly logical place. Like, it has to occur there. And we just need to see how we follow through from here. So there's a couple of reasons why we wouldn't add risk, but I don't think that one candle in and of itself at that point is so shocking just yet. So I'm going to go FRP, and not adding any new risk for obvious reasons. If we saw a very shallow pullback, a little dink from here, really that's all we're looking for, isn't it? A little bit of a dink from here, followed up with some nice white candles or a long lower shadow, and absolutely a good look to go plus 1/3 again on Raiz Invest. Thank you, Tony. Craig's going to finish off our Aussie offline requests with RHI. It's one we talked about, I'm pretty sure last week. I said I needed to see a white candle high close. I drew that in, so that candle I'm going to delete in a second. But I needed to see that candle. Let me just delete it for you. okay, before I felt comfortable adding risk to it, and it looks like that candle appeared in the next candle, and I'm pretty sure I ran it on that day as a just a general rank and file uptrend. I think we can get rid of that now because we got the candle we wanted. I did say we're FRP, so we did end up getting that occurring, I think. It's fine here as well. You know, that would be another plus 1/3 for me on that candle there. So, and today is just an FRP, so I don't think we need to do anything today. Do anything on today's candle. It doesn't warrant it, but certainly we can say here with confidence we're FRP. Probably a bit slow and steady on this one is what I would expect from here. I might have mentioned that last week, but that there's still a lot to do to prove itself here. But if it's a stock you like for whatever reason, the technicals are supportive of adding risk. Thank you to the offline requests. Equally, thank you for everybody being very patient over here online. Robert's got some US stocks. We'll do those in a little while. Tony might be the same Tony who asked for ACE, and it is the same Tony because he's asking for RZI, which we've done. Jackie's got Carl, the 30th of January is a Thursday. Did I screw up my calendar? Because I did use the Windows calendar here, and I clicked down. And how did I get to, maybe I clicked too many times. Maybe I clicked 100 times. How did I get 30? December 30, maybe I clicked and I didn't get to where I was supposed to go. Anyway, that is a very, very astute observation there, Jackie. I'm going to blame Bill Gates and Microsoft Windows. Okay, so the Monday after Australia Day coincidentally is a holiday because it's Australia Day's on the 26th. So we'll go the 3rd. Honestly, I don't think there's any point going a week earlier because there's just not going to be enough of us around to warrant it. So let's do the 3rd. Apologies for that. I'll adjust it in the final slide for the everybody in the recording. That's my fault, but appreciate your input there, Jackie. Let's go to Robert, who's asked about AXE, which we've done. DGL is the next one. Oh, I like this. I didn't see this today. And if I did, I would have put this in to the 1/3 list, absolutely for sure. There's a bit of a level there. We've obviously just zooming back to the weekly to see if there's anything we need to be concerned about. That's miles away. I'm not worried about it. Oh, look, there's a little bit of a level through here as well. And that could have some influence, and that's going to kick in around 80. So let's just be mindful of that. But classic turnaround setup, isn't it? So we have moved from short-term downtrend driven for the most part, impeding upward price action, to short-term uptrend driven for the most part, supporting price action. We are price action high peaks and high troughs. We are predominantly white candles. We've got a couple of really nice white candles actually dinking out of the long-term uptrend movement, which itself has turned amber. So these are all the criteria for a turnaround play. We're literally just going tick, 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 tick. We've seen previously, not that long ago, a great move, a very strong move. And I would say actually a very well supported move here on volume. It looks very small, but only because this big volume event here is sort of skewing everything. But there are several other volume events there, and that's another supportive factor for our turnaround play. Also that this push here did take out several points of supply. So, you know, for me, there's a changing of the guard. So yes, turnaround play, FRP plus 1/3 for me. And the final thing I'll do is just check my turnover filter because I suspect that's why it didn't come up today. And you can see a 0 there. If that was a 1, it would have come up in my scan and would have been in tonight's list, but not the case. Doesn't mean it's a bad trade, just means it's doesn't meet my turnover filter, which is in place because my chart watch lists are watched by probably hundreds of people. So we need to have that minimum turnover. I'm pretty sure not pretty sure, I've definitely been burnt on this a few times. And yeah, that's very frustrating feeling because you kind of put your faith in, again, that setup, and the setup hasn't paid off, and I suspect it's just because it's bloody Weebit. But I'm pretty sure I ran it here as a plus 1/3. I don't think today's candle is enough to push us off that thesis just yet. I think we would feel very differently about it beneath there and very, very differently beneath there. Okay, so watching those two levels, but I think still managing, still keeping the risk that we have on this one at this stage. And I do know that we kind of looked at it back here, didn't we? And then this was a rally, and I hate it. It's a rally for no good reason. There was nothing in this rally, nothing to support it. There's not a single reason for it. And the model is the model sometimes, and that definitely did not work out. And then it did the right thing again. So I'm forced to run it, aren't I? Knowing in the back of my mind, probably this is a bit of a tricky one. But to answer your question, happy with a full risk position, not adding a third on that last candle, and staying the course until we interact with those 2 points of demand I've identified there. Yeah, it's just tough sometimes for the leopard to change its spots. Let's go to John, who's asking about BIS, which coincidentally we have talked about. So you'll be very happy, John, that I've not only run that in the feature list, run that in the regular list, but it's gotten run in the feature list for tomorrow. So let me just officialise it by putting FRP, so full risk position, FRP plus 1/3 on that one. And your other one here is Botanic, which I think is increasingly doing the right thing, and happy therefore to continue to run with this one. Actually ran it today in the regular list, didn't quite get featured today, but certainly deserves a place in the regular list, and a plus 1/3 on today's candle. Slightly higher risk than it, because yes, it's a turnaround, it's not a continuation, so slightly higher risk than say a continuation play. But a very, very solid turnaround play from here. Let's go to Perry's got some US ones we'll do in a second. Sue's got CAT, which is still going okay. Let's just zoom in because we do have the beginnings of a bit of a problem. I just want to get rid of some of this, but I don't want to get rid of stuff that we might want to keep there. Let's get rid of those. Certainly get rid of those. I'm not sure why I wrote minus 1/3 at that arrow. 150 is definitely blue sky. I don't see why you would sell a third at that arrow. I might have been talking about something else. I don't know. But I can't see why. Yes, that's a bearish candle, but in and of itself, it's not enough. And it's not a round number, 350. I don't know what I was thinking. If you know, let me know. Given that's the case, I'm going to repurpose this one because I will do something which we can all agree on. See myself written FRP here. It's weird, isn't it? I must have been saying if you see something else, why else would I write FRP there, right? And then put minus 1/3 pointing at the same candle. It doesn't make any sense. The FRP makes sense, but the other one doesn't. But this will make sense to you when I do this. When I say close beneath there. And I'm going to say it feels like a minus 2/3 for me there. I think you can keep some skin in the game on this one because it's just got such a great pedigree. But I think on a close beneath that trough there, for the most part, because the trend ribbon's going to be moving higher over the next few days, and maybe just give it a little bit more room. So you could even sort of say beneath the trend ribbon. We'll do 2/3 instead of a third at that one, and then just sort of see how we're going with that last third, because I think you want to keep some skin in the game here. So perhaps that minus 1/3 arrow didn't make any sense, but hopefully that makes sense. So we've got plenty of FRPs through here, haven't we? There was a close down there, which would have been minus 2/3. So very similar, that one there, that call there, very similar to this call here. Let's go to Sue's second one, which is RBTZ, which it's just a little bit of a pullback. I don't think there's anything too sinister going on here. Levels. It's hard to do levels with an ETF because they're really going to move on the constituent parts. But let's, just for consistency, say certainly there we've got some issues. There's a bit of a level here because the old point of demand should act as a point of supply, but these candles they're so benign in and of themselves. I mean, they're small. Yes, they're upper shadows. Yes, they're the supply side candles, but they're fairly gradual. We could get a couple of white candles here, and you wouldn't be surprised or worrying about things at all. But we don't have really, until we get down here, the point of demand for safety. It's tough with an ETF again because we don't have those key levels. They're not as strong. So let us say, because we need to have some place, let's go close, and that's probably a minus 2/3 kind of thing down there beneath the trough and the short-term uptrend driven. Keep an eye on that level. If it's a big black candle, maybe that's your first third, but depends on the candle. I just think don't get too excited about that one. I think we're fine on that one. PBH, frustrating. Another one which was such a great trend, and nothing lasts forever. Unfortunately, we've got a little bit of an ice cream sandwich there. So that's the black candle, the white candle, and black candle, all roughly of the same sort of length. Typically a bearish pattern. We've got confirmation of this supply, this supply, this supply, this supply, this supply here. It's all been confirmed in that candle. Well, those two really. These highlight both of those. And then I think you really would say on a close beneath here, we're a minus 2/3, and we're very close to that today. If actually having done it today. So I'll leave it up to you. I'm kind of roughly drawing beneath the bottom of that last candle when I do draw. That low there is 94, so it might be a 93, close beneath 93. And I'll write that on the screen, and that close today was 93.5. So it wasn't quite there, but I think that's the area. So close less than or equal to 93. And I think we're almost at a ZRP now, because there's enough there, I think, to put us at that stage beneath the short-term trend ribbon, beneath this, the confirmation of the candles. I think there's enough to say, look, let's just go and do something else with our money for the time being, and if it starts to pick up again, we can always revisit and take the next move from $1 to $1.50. But for now, just respecting also our risk management model too, which is suggesting to us we should have less risk in the market over here in Australia rather than more. Let's go to Rapalm. Don't type any new ones in. We do have to end at some stage tonight. Matthew, Rapalm's got some US ones. We'll do those in a second. Matthew saying, in general, hi Carl, do you have any suggestions for how we manage our portfolios if we're away for a couple of weeks? Thank you for everything. Well, it really all depends, Matthew, on whether you can or you want to check the market while you're away. And the internet's not that hard. I certainly don't suggest you sit there by the pool with your stocks app going the whole time, because you're going to upset everybody and you're going to have a miserable time. But you can see what we do here. You probably only need 20 minutes a day, 30 minutes a day, and that's if you want to add new trades. If you're just checking the trades you got for, is that RP, is that minus 1/3, probably it takes 5-10 minutes a day. So it just comes down to whether you're prepared to just monitor your trades only and just monitor them for exits, whether they be hitting round numbers, and that's really all you have to do. So if you don't want that headache, then there's not a lot you can do. Hard stops are an obvious place. So looking for, like with the analysis we do here every Monday, that's where I knock out a third. If it got down here, I'd knock out another third. If it got down there, I'd knock it out, and putting hard stops in the system, set and forget, go away. And then the nuclear option, which is not the one I suggest, is to exit everything and then just go, because I think in this day and age, and certainly go back 20 years ago, that was probably a very valid option. Even then we had the internet. That's how old we are now, aren't we? 20 years ago was still at the internet age. 30 years ago, not so much. Nuclear option is get out of everything, but I don't think you need to. So you don't have to run your scans and get all your new trades, but that's starting to be a miserable holiday. But certainly just managing what you've got. Let's go to Matthew commenting on WBT. Don't forget to show everyone the Christmas present on the chart you gave everybody in Auspice January 23. I don't feel that way about it this Christmas, no. So this wouldn't be on my list of best stocks for 2025, but you're referring to, I think, Christmas 2022, where I gave it, you had to pick your stock for 2023, and it was, it went up a bit after that. But that's, that's just luck of the draw, and it was in a trend, and I had to pick one on the spot, and from memory, that was the best trend I could find at the time. But oddly enough, those are often the best ones. Let's go to Hoozle. Thanks, Carl, for turning up every week and doing these calls from the generosity of your heart. Always a pleasure, not to mention the market index post and watch list. Wishing you and the Capilano family very happy, joyous festive holiday season. See you in the new year to navigate through Trumponomics. Well, hey, that's another reason not to do anything in January, isn't it? To come back when that's all over. Appreciate that, Hoozle. It's been an absolute pleasure. I'm still here. I'm turning up, so it can't be a burden because I would have stopped doing it a long time ago. You might have noticed, and I don't think this caused a duplicate, but maybe this is what caused a duplicate. But I extended our Monday calendar invites. I extended them out indefinitely, I think. So yeah, look, I'll be back. Let me take a little bit of a break. You take a little bit of a break, and we'll certainly be back in the new year and to continue to do it all again. You're very welcome. Let's go. Thank you, Jackie. Thank you, Michael. Let's before we do all the thank yous, head back up the list because I want to get these US stocks done. It's getting a bit late over here, and I'm sure it's getting very late where you are. We're going to kick off with Rupam, who's got APP, and I must do the offline request as well. And there you go. So it is evident both here and abroad that it's just not like what it was. And I think there's 400 Rupam. Surely you got some out of 400 because I reckon that's, there you go. So that's compulsory. I don't know if you remembered to do it, but you had to take some off the table at 400 by default. And isn't it just funny how sometimes round numbers do play out almost immediately, cascading back down. Those two candles blended together and that move from 400, I would go third here. So I think at most we're a 1/3 risk position on this one, and we're not far away from knocking that final one out. Not because there's anything really so sinister going on here, but just because it's a function of that had to be the first one. In fact, I've drawn that a bit high, haven't I? So, just underneath the 400, you would have done that. Then we have the confirmation, we'll have supply side, really blending these two candles together and drawing arrows at. And then that's, if there was no round number, then the two black candles would have been your first third, and this would have been your second third. But it's not the case. We've got the round number, so therefore this just happens to be our final third. So FRP for now, and I don't normally type that, but I've typed it anyway, minus close beneath there is the minus third, which might well put us at our zero risk position. And if I can do that enough times and do this and go visual order and bring to front, that will now stay there. We'll click save. Just quickly do the offline, actually there are no offline US stocks this week. Okay, so that's handy. Let's go to Rupam's second one, which is CVNA, which is Carvana, which is a far milder pullback so far. Nothing too sinister going on here, but still giving us points where we can act. I feel that this is your first point here, given Rupam, given your lower peaks, lower troughs. You've got a couple of in there, but it's really the closing beneath that trough there is the catalyst, and at most on that, because it's a very gentle pullback. And hopefully you can see that when things are more rigorous, we take more rigorous action. When things are not as rigorous, we don't need to. So I think that's where your first third is, and then I think it becomes extremely straightforward from here. And they're the ones I like, that are extremely straightforward. So let me take that now, because I've got the magnet on, and close beneath there, we're going to be all out. So close less than is a ZRP. I think that one's nice and straightforward. Click save on that one. the last few weeks that we've checked out US stocks, we've all done FRP plus 1/3, haven't we? We haven't even had to consider where we're getting at. The Aussie section of this presentation is always a bloody slog, isn't it? I'm always writing close less than minus 1/3 all over the bloody place. For the last few weeks in America, we haven't done any of that. It's all just been FRP plus 1/3, FRP plus 1/3. And now here we are having to do some of this here. And that's just how it works. CCB, which is Coastal Financial Corporation. Let's have a look. Okay. Whew. Relief. Some great charts still out there. This is going to be one of the better ones we're going to see tonight, no doubt. It's perfect. Do we need to add risk? Hey, if you've got the room, this is as good a chart as you're going to see, isn't it? So it's obvious what we're doing here. FRP plus 1/3. Great, trends. The price section, yeah, a little bit of a lower peaks and lower troughs there, but it just came back, just smashed through. And really that just pullback was just getting us to the short-term trend ribbon or the dynamic demand there. I don't think there's anything out here, but we should check. And there isn't. It's all blue sky, so I'm liking it even more. The perfect chart setup, isn't it? So let's click save on that. FRP plus 1/3. Thanks, Rupam. And one I'm very interested to see, because that semiconductor ETF has come up, is NVDA. So if that semiconductor ETF is going well, then geez, I would have thought that would have been doing better than that. So that's interesting in itself. But this is not looking so good, and we've talked about this last week. And we said here we're at a 2/3 risk position. We might consider it on the next high close. I do remember us talking about this one. And we also would be ZRP beneath that trough there. I think we could rule out that now. So let's just draw a line through that. Okay, so I think we could rule that out now. I don't think we're going to be next high closing anytime soon, or certainly not enough to get us into a more risk. Are we less than 2/3? Is there a catalyst to get us out another third before this one? We've got lower troughs, we've got confirming supply candles, we've got a second confirming supply candle, but each just closing a little bit off its lows. I think there's enough to suggest that we need to respect that. So no change from our analysis last week. We're 2/3 risk position at best, and we're zero risk position beneath that one. Let's get rid of that Dell, because I reckon we went from here to Dell next. We're not going to do that this time around. We're going to say thank you, Rupam, and keep moving up the list to Perry, who's got Tesla, TSLA. And very good. FRP plus 1/3 last time. We're just simply going to click on that, go copy, go paste, put that here. I am curious to see, or just to confirm, that we're blue sky here on Tesla. How good's that? What an amazing stock this thing is. Is this the new NVIDIA, perhaps? I can't fault it. It looks amazing. So, Perry, I'm no doubt you're on this, Perry. And I'll leave it up to you whether you want to add more risk to it, but certainly not selling a single share of that one. Keep calm is Perry's next one. And that's very calm also. So let me just take, once again, an FRP plus 1/3 from a previous set of analysis. Shows the analysis is pretty good. Click save. For completeness, just have a look back, but I don't think we're going to find anything that's going to worry us there, and we haven't found it. And it's just perfection. Yeah, just low volatility, no headache uptrends. So getting back to what I said before about Weebit, okay, it's not the furthest thing you get from just boring low volatility uptrends, but boring low volatility uptrends are the best. Let's go to CCB, which is somebody's already pointed that out, and no surprise that Perry's also found that one, so that is very good. Maybe I didn't click save on that last time. Let me just make sure that I did also save that one. And we're going to GIII, which is G3 Apparel, which is a nice breakout too. Great base pattern here. I love to see the base pattern breakouts. You're getting it very early, I think, here. Let us go to the weekly chart to see what is above this. And there's not a lot. I mean, this is sort of borderline on the edge of the chart. I'm curious just to see where that kicks in. There is a bit of a level there. It's in the mid 40s. You know, look, it's 44. Let's call it. It's old. It's very old. I mean, it's early 2020. So let's not get too caught up by it. So, at 44's bloody miles away. So there's absolutely no reason to not do this one. Let's go FRP. This is very clear cut. The FRP plus 1/3. Again, if you're looking for risk, we really have to thank Perry and Rapam for finding us some really great trades here, doing the hard work for you. So very good on those. Let's go to just heading up the list here, scrolling back up to Robert, who had IONQ, which is IonQ. I don't know, Ionic. I don't know how you pronounce that one. IonQ. We're okay. I mean, obviously short-term uptrend, long-term uptrend. Just the price action and the candles are just giving me a reason for pause, and by that I mean that we've got 3 pretty nasty supply-side candles in here. That would give me a reason to just sit back and let this one prove to me it deserves the risk. And if we look at, say, the move from that high there to that low there, and you can just literally take those two numbers, and that low there would be 28.04, and maybe it's that high there, in fact. The peak is obviously 38.45, so add those two numbers together, divide by 2. I want to see us close above that. Another way we could do it is to grab a Fibonacci retracement, which if I'd ever used it in here, I would know where it was. There it is. And literally snap on that one, and it would say that we have indeed closed at least 50% of the way back up there. And not that I put any credence in any of the other Fibonacci numbers, because it's not about those the magic of those numbers for me. It is just literally there was that much supply. I need to see at least half of that eclipsed to get me excited about this again, and that's all it is. It's a common sense approach to technical analysis. It is not a believe in fairy tales and magic approach to technical analysis. Please understand that. So yeah, look, I think it's done enough. Today's candle is strong, but you know, even that candle is a supply. So there's just something about it that is just holding me back, as you can tell in my voice. We've also come beneath this trough here. We tickled that one there. And really, we do need to ask. I'm going to get rid of, let's get rid of the drawings. So those. So I don't want to get rid of the text. But obviously, we've looked at it here. We've said FRP. So we have, made a really good call on it in the past. And maybe even Robert's asking about this one on the basis of owning it. And if Robert, that's you, then FRP. So that's the easy part. The tough part is whether we're adding risk to it. So that's the easy part, FRP. And I'm not going to put the plus 1/3 on it on the basis that I think we've seen some other ones that don't have this stuff to worry about. They don't have these big black candle showings. So I'm going to go for FRP and just leave it at that. And I think for me, I tell you, if I had it, I'd just be happy holding it and seeing what I could get out of it. I don't think I need to add risk to this one. I'd be adding risk to some of the other ones we saw tonight, if that makes sense. QBTS, actually let me save that before I run away. And go QBTS for the next one. D-Wave Quantum, sounds exciting. Again, we've got a few supply side candles there. And again, we've got the most amazing comeback. We are volatility squared here. That's not a bad thing, as long as we get upside volatility and not downside volatility. But it's one that's, the leopard is showing spots both ways. So giving me a little bit of cause for caution. And cause for caution. Now, the portion part of it is deciding, well, maybe, did you notice that little save there? Maybe we might want to go plus 1/6 here, because it is a wild one. I'll leave that up to you. But if you are this way inclined, I can see a path to doing that. it's got better price action than the last one in that this low here, today's low, the demand candle, is coming in at or above the second from last peak, which is getting it up the list in terms of score out of 10 for me. It is being pushed down the list by those three wacky big black volatility, downward volatility candles, but I can't fault this. We're more than halfway. We're way more than halfway. We're almost near back at the top. $5 is possibly a reason for the wackiness as well. So maybe I can forgive it that. And that's why, if we're comparing this one and the last one, I think this one is the one that deserves the plus or the adding of risk, where the other one I said, I'd just be happy that I owned it. This one, yes, I'm happy that I owned it, if that's the case, but I can see a path to adding a third, or if you're not a third, a portion of that. Perhaps a sixth. Let's go to the final one for this evening, which is SOUN and Soundhound. Okay. Oh, see, Robert, I could not have picked three better setups for you to give me from a teaching perspective. How long did I spend on the first one? If you have to spend that long on IONQ, okay, let's just go quickly recap. Powerful upward move, pull back to the short-term uptrend, massive white candle, okay? Consistent themes across the three. But here, the price action was encroaching on previous points of demand. I didn't like that. Yes, we've got up more than a halfway, the balance point, but not substantially more, okay? Big black candles, big supply, big downward volatility candles in the mix, okay? That one I said, just be happy with what you got. Then we went to the next one, which is QBTS. And we said this was better because the trough is, this trough, if it will be a trough, we expect it will be a trough, but the big demand candle coming in at or above the second from last peak. Yes, there's some downward volatility, but we're way more than halfway. We're probing into that. And there's a reason for the volatility. There's the round number. So this is moving up the food chain. I said, happy with what we got. Yes, but we're adding risk, if only half the typical what we do. And then we get the next iteration. It's like you meant this to happen, where we go to now I can't fault it. Look at the volatility of those supply candles. It's actually very little relatively to those other ones. And even on that chart, yes, there's an upper shadow there, but fairly modest. The one before it, we've got shadows both ways. There's demand in the system there. And then this shadow here is fine. That's a little bit of upper shadow, but still a white candle. This trough here is at or above. Is it at or above that peak? It's miles above. It's miles above this one here, which is the crucial part of it. Clean moves, clean candles, clean trends. Are we more than half of the balance point of that pullback? We're not just more than half. We've blitzed through the point of supply. So what an amazing three. Now, if there is an issue here, it's only that there is a bit of a major point of supply up there. And this is an IPO, so it's post-IPO. There's going to be a few traders that were stuck in there that may well want to extricate themselves from the situation when we get up there. Is that enough to prevent me from having a crack at this? And I don't think it is, because that's just too strong. So for me, no, I'm definitely very happy to have some skin in the game. Go FRP plus 130. I don't think it's plus 1.6, but I want some skin in the game on this to see what happens next. But what a fantastic three stocks from a teaching perspective. And this is how you tune your eye, and how you go from, I'm not quite sure what to do here, to I know exactly what to do here, and that's where I want you to be in the second bit. Okay, I'm pretty sure I got everybody's requests tonight. Last chance, if I didn't get your request, if I've missed one, to just type it in there. While you're doing that, I'm going to put that up, but I'm also going to do this and go to here and go here and make some tiny adjustments. And Jackie will be watching this like a hawk, no doubt, and I'll be double checking it as well. See, I know what I did. I did click down, and then I saw the 30th as a Monday, but that's the 30th of December. Okay, so let me head back here. And I'm pretty sure I got that right, Jackie. Double check it for me, just to make sure. But we will be back on the 3rd of February, everybody, for the next edition of Live Market Analysis. Hey, I've got an email address. You've got an email address. If there is anything really pressing in the meantime, look, feel free to shoot me an email and I will respond. As you know, I respond to everybody. Yes, certainly keep in mind that we'll be on a break for a little while. The content of tonight's presentation is general in nature, has not taken into account your personal financial circumstances, objectives or needs. So before acting upon any of those, consider your own situation carefully or seek the help of a financial professional. Anything you do in the markets is up to you, and the results are your problem as well, caused by you and dealt with by you. I'm not responsible for those. David did get in very late here. Zip and APX when the system crashed. Okay, and that's fair enough. We're going to do a rewind, everybody. And fair enough for David. He put them in. We had a crash. For the people watching in the video, you don't know what happened. We did have a technical issue, and therefore, obviously, David's two were missed. Let's talk about this one. Let's do it very quickly. Zip. David, I feel that if you've been watching my sessions in the past, you should have already known what to do with this, because it looks like we've been all over this one. We've said on a close beneath this trough low here, minus a third. You got the close beneath there with a big black candle. I reckon you could almost have done minus 2/3 there. Then we said on a close beneath here, not only have I written minus a third there, but we've also said ZRP. So where are we on Zip? We are not ZIP, but I feel we are ZRP on ZIP at this point in time. Okay, if you've missed those, that's okay. You now need to make a very clear decision. We have, as I said at the start of this presentation, we have lines in the sand. We have boundaries that we should not cross. What is your boundary? If you've crossed it, you need to get back on the right side of that boundary. APX was a tricky one today, very disappointing. A little bit like another one we said today, that that volatility that's coming into the market, we're getting great signals. I think it was Kogan, and then the market is not conducive to these moves. That's disturbing. I mean, I ran it here for the first time in this phase, right? So we were. Ooh, okay, well, actually we weren't. I was going to say we were ZRP, but we're not ZRP yet because we didn't get a close beneath here, okay? So just let me extend that across. So we actually haven't closed beneath there. So in theory, you could well have been, and all due respect if you are, still holding. But that would have been a plus 1/3 for me. Let me write that on there. It was in the watch list. I think for safety, if that 1/3 went in, today's candle bloody well killed it. And let me actually change that to a plus 1/3. And then I'm just going to copy one of these and put that in there. And I'm going to reiterate that beneath there is a ZRP. Okay, so fortunately I think APX and ZIP are two fairly straightforward catch-ups there. All right, we are going to head back to here. And I think that's it actually, so we might head over to here and point to the cat who's doing what we have to do at the moment, probably for the next few weeks as things get a little bit volatile, a little bit hairy. We'll just hang in there, and we have our lines in the sand. They're very clearly defined. We're going to stay on the right side of them. We're going to act with discipline, we're going to act with consistency, we're going to act with commitment, but importantly we're going to act, and we're not going to make that mistake so many other investors make, which is to not act. That inaction in the market is death, unfortunately. And the longer you leave it, the harder it is to act. And we've all felt that before. Not exactly a cheery note to leave you for in 2024, but certainly a very relevant, very important one. On a cheerier note, hopefully you've had a very fruitful 2024. Hopefully I've been at least a very small part of that. And look, if it is, shoot me a message. I'd love to hear them. And hopefully we can continue to do good things into 2025. It has been an absolute pleasure chatting with you this evening, and really all the best for your trading and investing. A very safe and happy Christmas and New Year period. Bye-bye for now.